Welcome back to At Home with Roby. I'm Patrick McIsaac from Roby Electric, along with Trent Haston from the Roby family of companies. We are your hosts, and we're now joined by the oracle of the mortgage industry in this studio, which means you're the only one, Brick.
There you go.
We're now joined
what I can get.
by Brick McDermott. Brick, welcome to the show, man. We appreciate you being on here. Your wealth of knowledge, your company is fantastic. What's going on in the mortgage world, my friend?
Well, thanks for having me on again. It's always fun to be with y'all. Nothing's changed really rate-wise since we were last here a couple months ago. It's great. Fixed rates, 3 3/8, 3.5, 30-year fixed. It's still good. So there's nothing really going on rate-wise.
Great.
How long could this environment last?
I would say, I think end of this year's a good prediction there. I just don't see the economy still stumbling along. I mean, there's some good things happening, but slow. It's just taking a long time to really get to what the Fed ultimately wants to see. And we're still under 2% inflation. Jobs are steady but not great. It's just the GDP is still stumbling along at 1%, somewhere around there. There's really nothing there. And honestly, I'm a simple mind, I guess, but my thought is the best thing going on about this economy right now is the housing. Housing's great. It's been going on a good ride for a year and a half now. Prices are going up steadily. Mortgages are still, applications are up. Everything's going great, and I think a lot of that has to do with the rates being so low. So once the rates jump up, then that could really hurt housing, which is one of the few consistent things going on with the economy past year or so.
So I'm going to translate this for the country folk out on the southwest side of town. So the Fed has very little incentive to raise rates because it could affect the main goods sector of our market until the other sectors are gaining strength. Then they might raise rates.
Yeah, the Fed has what y'all might, or what everyone knows of as the prime rate. It's the Fed rate. It when you have an equity line, it's based on the prime rate, which is 3.5 right now. When the Fed raises the rates, that means your equity line rate goes up. That also means what the banks have and what they're making interest on, because the banks are paid on that based on that Fed rate. So that's where all the interest is. And not necessarily every time the Fed raises the rates, the mortgage rates follow.
It really follows with the 10-year bond. I mean, that's really technically
10-year Treasury, exactly. Okay. Just for example, the last 2 or 3 times the Fed's raised the rates, this is over a 10-year period because they really haven't done that much lately. The mortgage rates have dropped a good bit. So we could even potentially see a rally this year because I think in December the Fed will raise the rate in the December meeting. But, I wouldn't be surprised if there's a small short-term rally on the mortgage rates. We might get them drop a little bit.
Wow. That's awesome. Well, let's talk about some of your products and some of what us in the construction industry and in the remodeling and renovation market for residential houses. Let's talk about some applicable stuff. I mean, you have renovations, reno loans.
Right.
Mm-hmm. Educate the public on this.
Well, you can either have your own have the house now and do a refinance and want to add, add a bathroom or add some square footage. What you would do is you'd refinance your rate and you would add, say, $100,000 to that, and you get a construction loan or a renovation loan based on the full amount. And we would send the appraiser out there. They would value the property with the additions, so the future value, and we would structure our loan based on that value, and we can go up to 95% on that for a $417 maximum loan amount.
Wow. And that is in the 3.5% range right now?
That's right. I mean, you're 3.5. The credit. That's with superior credit, 740 or higher. But even lower credit scores, we can go as low as 640, even in some cases 620. The rates are a little bit higher. But for the premium credit, you're going to be at 3 3/8 to 3.5. on 30-year fixed.
And it's pretty parallel to just a standard if you're not renovating. If you're just buying a house in that same price range, it's pretty standard.
Exactly.
So the rate's pretty even.
Yeah, exactly.
Let me ask you a question. So do you do most of these reno loans on people buying a house? They go, hey, this house needs a screened porch or needs a bathroom added to it before I move in, or you do a lot of them in existing homes, or does it not matter?
We can do both. We've put together renovation loans for as little as $5,000. Say somebody buys a house and says, "Oh, this is great, but I really want some new countertops or new paint or new carpet." We can do that as long as the appraisal has value in there, and we don't even need a licensed GC to do something minimal work like that. So a licensed general contractor. So we just need invoices and know how much it's going to cost, and we'll add that to the loan amount and set it up as a renovation loan.
Wow, that's interesting. Folks, you're listening to At Home with Roby. We're joined by Brick McDermott. We're talking about a reno loan, which, Brick, it sounds like we need to get you in front of the National Association of the Remodeling Industry, which is something that we talk about on the show quite a bit. NARI is a moniker, of course. And, this is something that could help not only you, obviously helps our industry quite a bit because what does it do with fuel is remodeling?
Exactly.
So that's great. As little as $5,000, and it says here, it could be $40,000. So you don't necessarily have to have a general contractor involved.
Right. Now, once you start tearing down walls and restructuring having new structures and all that, then you need an expert on it. But as long as it's cosmetic stuff, we don't need it.
I just saw Brick squeeze a smirk out of the side of his mouth. That's like 200 people you can get in front of, Brick, on Patrick's invitation. Way to go, Patty.
That's it. Yeah, hey, got to plug it in where I can. I've got about 3 more months of my presidency, and then Mr. Eddie DeRode steps in. So,
all right.
So yeah, that's great. That's a big deal. Let's talk about one other thing that I know that you wanted to bring up. Obviously, we can swing back to reno loans if it takes us there. But what is this $15,000 down payment assistance I'm hearing about?
North Carolina Housing, which is a nonprofit organization here in town and all over the state, every 6 months they come out, or probably once a year, they come out with a incentive to try to really bring first-time home buyers, get them to jump in on the American dream. And a lot of times the down payment assistance program, which is what they offer, is something that can really help your first-time home buyer get into a home. Right now, they've got it starts October 17th of this year, so in a couple weeks, $15,000 down payment assistance. And what that does is that can go towards down payment. It can go towards a combination of down payment and closing costs. It can be in conjunction with more down payment from your own pocket. The biggest caveat is you have to be a first-time home buyer. The household income cannot be over $67,000. So they're looking at all folks in your house and what type of income they have if they work. So there's a cap on that, and also the homes, I think, is a $245,000 sales price. So this is really good for the true first-time home buyers. But it's a way to get them into their new first house. It's a great product.
Oh, I think that's great. You say that talking about, Sandy Thomas, our broker in charge over at Roby Realty, always talks about that first-time buyer and how valuable they are to building a long-term portfolio and building a network of customers. The same for you. You do good, buy them on house one, and as they move up the ladder and they have relatives and friends and cousins and they want to talk about it, then they spread the word and they end up buying more. What's the average? Do you know the study of how many houses someone owns during their lifetime?
That's a good question.
Well, I know up until a couple years ago when the rates just really got low, where they are now, it was a 5 to 7 year.
That's what I thought.
Turn
7
time.
years. Yeah.
So every 5 to 7 years, people move on.
Exactly.
Wow.
Well, you're talking about a first-time home buyer. It's similar with our business trend. We have services businesses, and when somebody uses Roby Handyman or Roby Electric, it sparks them when they're ready to do a remodel or an addition to hit Andrew Roby.
So when we return, we will be talking about the subject of monkey paws.
Because that's what we're just talking about. You're right.
We'll be right back.
Right.